right, if you're looking to buy another home without selling your current and existing home, you've come to the right place. We're going to talk about some of those scenarios in today's video. Right, so the difficult thing or the negative thing, if you want to view it that way, to start with the negative and finish with the positive, is that if you're looking to buy a new house without selling your existing and that is your down payment, it may cause a problem because without selling that house to get the cash from the equity, then you don't have the cash to put into the new place. Now, what some people do is they might get a home equity line of credit to pull out some of the equity from the existing house to have the money to put down on the new. And what some people do is they get a bridge loan in order to kind of bridge the gap between the sale of the old and the purchase of the new. In those two examples, ideally, the plan is to buy the new house and just sell the current house after. Those are typically not something that you use as a tool if you're looking to keep your current house and maybe rent it out, or maybe keep it as a second home, buy the new home and not get rid of the first home. So you end up with two properties. And so that's one thing. Now, if you're looking to buy a new home and you're going to keep your existing home and maybe flip it into a second home or a rental property, then you have equity or you have a down payment in your bank without using that equity, then it's super simple and easy. Like, you would just have to budget with both. And what do I mean by budgeting with both? All right, let's say that the new house mortgage payment is $1,625 a month. That's the new house. And let's say that your other debt, which would be minimum payments on like your credit card, your auto loans, things like that, is $780. Okay. And then let's say that you have a mortgage. We'll do one scenario with a mortgage and one scenario without a mortgage, okay? And let's say that you have a mortgage on the current home and it is escrowed and that payment is $1,115, okay? So then I'm gonna take your $1,625 new house, your $780 other debts, your $1,115 on the new, and that's $3,520. I'm gonna do that one more time. 1625 plus 780 plus 1115 equals 3520. Okay. Now let's say that you make 8,200 a month. I'm going to divide that by the 8,200. That gives me a debt ratio of 43%. Of course, a million other factors go into play, but that's just an example. And 43% with decent credit and some savings left in the bank, like you're not liquidating all your money to buy this new house, you're probably going to be fine. Let's compare that to, let's say if you don't have a mortgage, because this question comes up a lot, okay? So let's use our $1,625 for the new house, and we'll use our $780 for the other. And remember, you have no mortgage, but even with no mortgage, you are responsible for home insurance if you have it, which most of you do and you should, and you're responsible for property taxes. So maybe your total payment is not $1,115 because that includes a mortgage. Maybe taxes and insurances run you $246 a month. You still have to budget with that. So now we have $1,625 plus $780 plus $246 gives us $2,651. Divide that by 8,200. And you're at a 32% debt ratio, which is probably going to work just fine, just depending upon a number of other factors, including credit and job time and just a bunch of other stuff. But a lot of times that question comes up when there's no mortgage. Now, remember we talked about a line of credit or a bridge loan as a possibility if you needed the equity from the existing house to buy this new home that you're buying. And we assumed that you had a mortgage in those first statements. Now let's assume that you don't have a mortgage, okay? And sometimes you're buying up and sometimes you're buying down. So let me give you an example. Let's say my no mortgage house is worth $125,000, okay? There's no mortgage on that. And let's just assume, just for shits and giggles for the purposes of the video, that your new house is going to be $98,000. I know that's becoming more and more difficult, but just follow me for this purpose. Well, what some people might want to do is just borrow 80% of the 125, which gives them 100,000 cash. Take that cash along with some of your cash you have in the bank, because you'll have closing and prepaids, and then just pay cash for the new house, which puts you at a great advantage because you're not predicated on financing. You may or may not want to predicate on appraisal, totally by your choice. You may or may not want to predicate on inspection, totally by your choice as well. In that example, you wouldn't need a bridge loan, and you wouldn't even need to get a mortgage on the new house unless you had the opportunity to do so, or maybe the rate was better, or whatever the situation might be. But that's another way to possibly buy that second home without selling that particular first home. Now, most of the time when I'm dealing with this, people are buying up and not necessarily buying down. So a lot of times they don't have enough equity in the existing house to just pay cash for the new, and that's where the line of credit or the bridge loan might come to play if you need it. Because if you have money in your IRA, 401k, or checking or savings accounts, or stocks, bonds, or CDs, and it might make more sense, depending upon what your financial planner says, to pull that money instead of touching any equity in the current house that you have. So that's an example, or a couple examples for you on buying a new house or buying a second house without actually selling the first house. Because what you may or may not know is if you go to buy a second house and you need to or want to sell that house to buy the new, then you would likely need to do a predicated offer, which puts you at lesser of an advantage, because you're saying, Mr. Seller, I'm going to buy your house, but only if mine sells. And of course, that makes it less of an attractive offer compared to cash, or compared to like conventional financing with a large down payment. But there's lots of different ways that this can be done, and I hope this has enticed you or sparked your ideas to get in touch with your lender, or talk to me if I can help you with how to manage buying a new house without buying the second house, and how you might leverage the two. So if you need anything, I'm at 985-300-LOAN or weeksteam.com, and I look forward to seeing you in the next one.